This year's budget has to be both demand and policy driven because these are the two important ingredients for driving growth in India. Insofar as external factors are concerned, clearly drop in crude oil prices, drop in commodity prices are two important factors that go in India's favor. However, slowdown in growth in China, muted growth rate in the Eurozone, and not so high growth rate in Japan is also indicative of low external factors. Insofar as internal factors are concerned, clearly demand is going to grow up, but industrial production is not showing any signs of revival, and the concern for monetary policy makers always is the inflation target.
So as Mr. Jaitley gets down to the drawing board for his Union Budget 2016, he will be aware of the international settings. He would recognize that we are having a stock market meltdown in China, we have Russia which is into recession, and Brazil which is struggling, which effectively means that there's a lot of expectations on India, both globally and domestically.
On tax reforms, there would be the legislative agenda and the administrative aspects. On legislative agenda, reduction in corporate tax rates and the phasing out of exemptions would be high on the agenda. I anticipate that a clear roadmap would be laid down in this year's budget. On administrative reforms, we may not see a lot in the finance bill, but adoption of expert committee reports led by Justice Ishwar and Dr. Shom, which tend to address several aspects on the administrative front, will feature in the finance minister's speech.
Probably he will cut the corporate tax rate for the first time in the 2016 budget. How bold can the finance minister actually become in the 2016 Union Budget? I think there's a fair amount of ground that he can cover. For example, he's got a lot of material that's already available with him. Whether he goes back to the 13 years old Kilkar Task Force on Tax Reforms, whether he goes to the recently submitted report of Justice Ishwar on simplification of tax code, or he looks at the voluminous work that Dr. Shom did insofar as the Tax Administrative Reforms Commission is concerned. So there's a wide body of work on tax reforms that already sits on his table. What the finance minister now needs to do is carry all of these reforms into actual implementation such that we actually bring a far more liberal, a far more progressive, a far more investor-friendly climate into this country.
This budget in specific terms will not do anything on the GST because GST will happen in the budget session. However, many of the changes that will be hopefully announced in this budget should be compatible with the budget, whether it is broadening of the tax base, whether they will reduce the CST rate to 1%, are those real indicators in terms of which way the central administration is moving towards implementation of GST. These are real effective steps, and the industry will be very keenly awaiting the outcome of the budget. Particularly from this budget, the number of legacy issues that I think people would be interested in is on speedy grant of refunds. It's something that has plagued Indian industry for a very long time.
I think by 2017, the finance minister would like to save the space for actually bringing in the GST and therefore focusing his attention on that big indirect tax reform. He will also like to make sure the investor attention is on the rollout of a roll-in of GAR, which was expected that year. And of course, India is working along with 90 other countries on rolling out the multilateral instrument to give effect to the base erosion work of the G20.
As India becomes a more capitalistic society, taxes such as inheritance taxes should be on the government's radar. And I do not know whether it's a tax for the current budget or not, but definitely this is a debate which the government should trigger in the short term for long-term sustainable fiscal policy.
The Prime Minister's statement of a Make in India, a Prime Minister's impetus to start up India really needs to get into the tax code by way of simplification, by way of rationalization, and by way of taxpayer services. And I think if we can bury the ghost of Vodafone finally and once and for all, it will be a great move by this finance minister. I think this country has lived with that shadow for just too long.
The government policy should be seen to be A, clear, and B, the execution of it should be intent-based, not loophole-based. When, for example, a tax is designed to capture a certain kind of income, it should not be extended merely by technical interpretation to capture other kinds of income. A case in point is the entire controversy that arose around minimum alternate tax on foreign institutional investors. It spooked the capital markets for a while. It helped that this government came out strongly, and after the formation of a committee has put that entire controversy to rest. But it is extremely important that the budget picks up such issues, clarifies government policy, because investors and corporates at the end of the day are looking at clarity and intent-based execution.
Several sectors are going to be focused. I see increased investments in the railways sector. I see more reforms in the area of civil aviation. Manufacturing is likely to show better figures in 2016-17 than what it showed in 2015. And of course, services more or less a kind of given, because services sector will drive growth in excess of 7 to 8%.
A big part of the Make in India would also be the, Make in India in the defense sector. There's a whole effort by the government to localize manufacture of different items, and the tax policies around that are going to be extremely important in making sure that those programs take off and are successful. So while Make in India is an umbrella program, but I think the defense industry is particularly an important segment within that Make in India, and we are expecting some big announcements in that space as well.
The activation of $6 billion infrastructure fund will feature prominently in this year's budget. So though the fund was activated in December 2015, we would see appointment of the CEO and the board of directors and strategic investors. This is likely to propel investments in the infrastructure fund, which was planned for in last year's budget. India, as a member of the OECD-led G20 Base Erosion and Profit Shifting project, will play a very important role. And in pursuance thereto, we would see several changes in this year's budget, which will tend to address the 15 action points agreed to by the G20, including India.
While this government has worked on making a lot of government policies very clear, one area which is crying for attention is the entire FDI policy on e-commerce. We've had close to $10 billion flow into the sector. We've had close to $20 billion promised into the sector, and yet we are still facing judicial challenge in the form of whether FDI in e-commerce is permitted or not. We are still having to rely on interesting structure models rather than a clear government policy for money to flow into the sector.
The overarching theme of this government has been addressing the ease of doing business, and I think it is going to feature prominently in this year's budget. Whether it's got to do with tax reforms or various reforms on FDI front, or infrastructure financing, or legislations such as the bankruptcy code, the commercial codes, and the arbitration law. So you will see every particular flagship scheme of the government addressing this whole notion: how do you make it possible for all forms of businesses to have an ease of doing business in India?
We need more by way of rules which are specific, which are certain, even if they are approximate, so that the lingering feeling of uncertainty of doing business in India, and which you know very well dealing with your client, there is always a sense of risk which people come here, unlike any other jurisdiction, and that should go away.